So you guys have asked for Arweave. Well, we've got Arweave for you today, guys. We'll be providing technical analysis and a bit of a tutorial lesson today for any of the beginners, anyone that's new to the community. Welcome to Crypto Bullseye. Today is Monday and it's Altcoin Overdrive. Let's get into the charts, guys. So as requested in the comments, guys, we're going to be tailoring this towards the beginners in our community. Do me a favour and let us know in the comments how advanced you are, how long you've been into crypto, how long you've been trading, whether you know a price chart, whether you think it'd be an advantage to you if I went over tutorials on TradingView, for example, or how to set up decentralized wallets. Let us know exactly what level that you're at as far as your crypto journey is concerned, and we'll tailor our content towards you. But so far we've had requests for beginners, and I want to really delve down into this from a beginner level, starting off with how we identify a trend. And it's very simple. If you're in an uptrend that's concerned as bullish, a downtrend concerned as bearish, sideways, neutral. Okay, so one thing that you can do quite easily is you can just look at the chart and see which angle it's moving. If it's moving from the top left hand corner of your chart and moving down to the bottom right hand corner of your chart, you're in a bearish downtrend, and that's signaled by a series of lower lows and lower highs. So you see here we've had the lower low, lower high, lower low, so that's lower than that, and it's signaled it's going from the top left to the bottom right. So opposite, when you're in a bullish trend, bottom left to the top right, signaled by higher highs and a series of higher lows. So at times you get things like a complex pullback where it doesn't quite make the highs, but overall you remain in a bullish trend. These tend to signal weakness. We're not going to go into these into too much detail in this one. We're going to go over basic detail as to just identifying in simple terms what the trend is. So higher highs, higher lows, higher highs, higher lows, lower highs, lower lows, lower highs, lower lows. So that's the simple way to identify the trend. You tend to get some sideways price action, which signals here it's a little bit of a downtrend, but that's more sideways action. So sideways action is a neutral trend, and you tend to get that after a big move to the upside or a big move to the downside. So in layman's terms, it's distributing after a big low and accumulating after a big move to the downside, and usually distributing after a big move to the upside. So that's just the simple terms of how to identify a trend. You see people putting basic trend lines similar to that. That's another good way of identifying the trend. If you fall out of that, it tends to signal a reversal in a lot of instances on a higher time frame. And what you tend to do is come back and test it and see what kind of reaction you get from there. So same goes for the downtrend. Stick your lines on there. You can stick your lines on there, and when you get the break, it tends to signal weakness and a reversal. So to see a reversal, you'd want to beat the previous swing highs. In this instance on Arweave, $41.02, and then you can start seeing a little bit more strength and possibly move to the upside. So we'll talk a little bit about where Arweave's currently trading at the moment. But what I want to do is go on to the next thing, which is the application of support and resistance lines. So the first thing we've done identified our trend. So what are we in now, guys? Remember, we've just mentioned lower highs, lower lows, lower highs, lower lows. We're in a downtrend, so we've identified our trend, and we're currently trading in a downtrend. So the next thing we're going to do is application of support and resistance. And what we're looking when we're applying support and resistance lines is where price action has stuck to the most. So if we get a few touches and the price action's got momentum from that area, then that's likely to happen again in the future. So what I like to do is change to a line chart. You can do that, just go up on, if anyone's new to TradingView, you see these candles at the top, go into there and change it to a line chart. And what the line chart does is it takes out the noise, which is represented by the wicks of the candles, so the extreme highs and the extreme lows of the candles. So it takes out the noise, and what we can do is we can simply look for sticking points on these areas. So firstly, I want the lows on there, the extreme lows, and I want the extreme highs. So we'll pop them on now. And there's a psychological reason for that, is people that bought at these levels tend to have sell orders at break even at these levels again. So psychologically these bottoms and tops have a lot of weight behind them. But we'll build in our additional areas of support and resistance now, and if you can see here, you can see that price action has reacted once, twice, 3 times negatively, slammed through, straight back down, 4, 5 times. That's a strong area, and that's likely to act as time 5 as well when we come to it. So when price action eventually reverses and we do get some bullish action, then this area is likely to be tested again quite highly. You've got 1, 2, 3, 4, 5 times this has been tested. It's going to act as strong resistance. So I think you get it, but let's build in a few more areas. You've got, so you've had a little reaction there, fell through, and then acted as resistance there, and acted as resistance there. So that's an area we would consider to be of interest. Right, let's build in the last few areas now. You've got 1, 2, 3, 4 times. One, 2, 3, 4. Let us know if this is too beginner for you as well, guys, so we can tailor the content further around that. If you want us to go a step back, if you want us to show you tutorials on certain platforms, let us know that as well, because we want this to be a journey together for all of us. We want everyone to be on the same level, we want everyone to have the same experience, and we want to teach each other within the community. So you can see this area here, you've got 1, 2, 3, 4, 5, 6 times. And can you see what's happening where we're building up these areas, the sticking points? You start to get more of an idea as to where price action is likely to move next. So you've got 2 there. So these are just weaker areas now. Well, that's 1, 2, 3. Right, I think that'll do for now. But I think you get the gist. What I want you guys to do, if you have got a TradingView account, just go in and build in your support levels and resistance levels. If you could take a snapshot and stick them in the comments or anything, just let us know, and we'll be able to help each other out on that. So any new community members, if you haven't got a TradingView account, it's free. I'm no affiliation to TradingView. It's free to sign up. You don't even have to sign up. You can just go on the website, take a snapshot of them and stick it in the comments for us, guys. Right, so that's the application of support and resistance. We can go back to the candle chart now. And the next thing we're going to do is predict the next move. So you can see that we've hit strength here at this level, represented by $12.43. So we had a strong reaction from the bulls. We had a strong reaction from the bulls signaled by this candle. So this is a strong area that we can build in here. And what we'll do is, rather than build in a line, we're going to build in a zone of this area. And what that's going to do is tell us if we get a close below the extreme low of this candle wick here, we're likely to come back and test the lows of $7.13, which is the zone below that we built in previously. So that's one way of predicting the move. We can do other things as well. I don't want to overcomplicate this thing for you guys today, so I'm not going to. But one way that we can predict the next move is, sorry guys, so one way that we can predict the next move is if we build an area of interest between the previous swing low and swing high, that can show us exactly where current price actions likely to come and retest. So if we go back and do it previously, I'll show you exactly what I mean. So build in here, you've got your swing high and your swing low. Price has fallen through, and this is the area that is likely to come back and retest. So back down, and it's come back and it's retested this area again. A negative reaction signaled by this bearish candle here. Lower low, lower close candle, which is weakness in the market, and you're more likely to get that big bearish candle down, which we did in this instance here. So you can see the strength here from building in this zone of interest. We're coming in and we're seeing how far into here we're going to get a reaction. This has come back and it's tested about a third of the way into there, a quarter of the way into there. It's been pushed by bearish action. It's come back in, retested, and what have we got here? Double top, signaling that there's weakness in the market and we're likely to get that lower low, lower close candle and continue the move down. So that's exactly what we did. And this is how zones of interest, as well as your support and resistance areas, can help you. So we've got the support and resistance area here built in on Arweave at 41.10. We've built in our zone of interest, which was the previous swing high and swing low. We've got the double top. Price action hasn't managed to breach this area. Had the lower low, lower close candle. And that's just high probability that we're going to continue the trend down. That's exactly what we've done there. So that's one way of predicting the next move. Another way is adding an indicator. I prefer price charts and what price action is telling me, what candles are telling me, supports of resistance, areas of support and resistance, should I say. And those are the main things for me. But another thing that you can do to add on to that, to get additional confluence, is indicators. So you can add in an indicator. I'm just using a very basic one to show you guys, which is the Stochastic Rsi. And the Stochastic Rsi, if you're not familiar with that, shows you areas of overbought at the top, which is above 80 in this instance, and you can change the settings to suit, but I just keep the standard settings on just to show you guys. So above 80% and you're in an overbought area, and below 20% you're in an oversold area. So we can get an additional indication as to where price action is likely to move next by looking at this in addition to current price action. So we're nearing an area of oversold. I think the blue line of the stochastic just touched the oversold region, and that's signaling that we're likely to get a higher move. So we've had a cross on the stochastic, and if you don't know what that means, it signals when you get a cross going upwards, it signals a move to the upside, and a cross going downwards signals a move to the downside. And I've got to add that this is a lagging indicator. Most indicators tend to be lagging, so you can't rely on this for entries pure in isolation. You would never trade a stochastic, or you'd never trade or enter into a trade based on the stochastic alone, because you'd just be doomed for failure. It is a lagging indicator. But using it in addition to confluence with what the price chart's telling us, we can weigh up probabilities to find out which way price action's likely to move next, and we'll do that now. So if we draw in our trend line on a lower time frame, remember I showed you how to draw in the trend line on a higher time frame, it works exactly the same. And we've been trading downwards in this triangle, and we've had the break, and hopefully we will get that break and close outside of that. There's a high probability that you'll come back and have a retest and see if we get a reaction at the levels here. So come back, retest, and then we can try and move. As soon as you get higher than previous swing high, then that's real bullish, and you're likely to move to the next level, which is signaled by $18.71. So we've built in these levels together, guys, and if you do exactly the same, you'd have 18.71 on your chart too. If you haven't, let me know exactly what you've got on your chart, leave in the comments below, and we can put each other right, we can help each other within the community, we can educate each other, and we can grow and learn together. So that's another way of adding probability, and it's going to be a waiting game most of the time. We're looking for high setups, and for high setups most of the time, unfortunately, patience is the key. So that's one thing. That's how you can tell it's overbought and oversold. And at the moment, it's exactly what we've just said. With Arweave, I'm looking for the retest. We can go in a smaller time frame and actually have a look to see if there's any sign of that retest, and there clearly is. This is the 4-hour chart, and we've had that reaction. Bulls have pushed up, sell wall, bears have managed to push it down, and what you'll probably tend to get in this instance is a 618 retracement, and you can see the stochastics. This is the 4-hour chart, remember guys, so the stochastics are in the overbought territory on the 4 hours. In the daily they're in, well, we see they're crossing upwards in the daily, I beg your pardon. So this has got to come down. So this has got to come down if we're going to get a positive move to the upside, and we've seen that we had that reaction. We're holding on the 236 level, which signals a strong bullish momentum at the moment, but we're likely to pull back down into these areas, at least the 382 and the 618, which is the golden ratio as far as the Fibonacci trading is concerned. So likely to get the pullback. What I would be waiting for, if I was looking at entries on dollar cost averaging, not financial advice guys, is dollar cost averaging into areas of support. So we got the base here, we got the reaction, the positive reaction we wanted, we got a confirmation here, we had the higher close, we've had the break of trend, we're waiting for the indicators to come down now, and we'll probably come back, test the 618, and then we can see what price action's telling us at that point. You don't want to hit the 618 and get straight in, you want to hit the 618, see if you're going to get a reaction from that. What kind of reaction? Higher high, higher close candle, whether you get a lot of volume, big volume spike. You can look at Bitcoin to find out the momentum of Bitcoin and whether Bitcoin's got bullish action in the short term as well. That adds additional weight to any altcoin trade. So that's how to predict the next move and how you can tell whether an area is overbought or oversold. Let us know guys if or what it is that you'd like us to cover next. Let us know if you'd want us to go over any actual trading tutorials. Let us know if you want to go over any strategies or how you can do your own strategy. Let us know if you'd like us to go over any back testing. Something that you should always do if you are trading is have a strategy that's been created and back tested by yourself. So if you're using back testing results from somebody else that's provided it, or if you're using an algorithm, you're not going to actually replicate that. If you give somebody a strategy, if you give 100 people a strategy, the chances are 2 of those 100 people are not going to trade that strategy the same. So it's all well and good having that strategy, but you need to create your own rule set and you need to back test it in accordance with your own rules. So if you guys want us to teach you how to back test or show you things that we look at when we're back testing, let us know. Remember, we're tailoring the content towards you. We thank you for all the support that you've given us. We've got around about 560, 570 subscribers, and we've only been doing this a month, so this is because of you guys, so thank you for that. If you do like our content, give us a thumbs up, subscribe, hit the notification bell. We do emergency crypto updates when we think that you need to know, and when the market tells us that you think to know, that you need to know. So thanks again, guys. Take care of yourself, enjoy your week. We'll be back on Wednesday, and Wednesday is how to manage risk to create wealth. So we'll see you Wednesday, guys. Enjoy the week until then. Bye now.